Good afternoon, everybody. Welcome to your Friday edition of the TraderMerlin Show. Hope you had a great session out there. Cheers. It is Friday afternoon. It's been a great trading week. I hope you had a good one as well. So a sip of fine bourbon to all of you, and whatever you are drinking. Orange juice is fine as well, even though the orange juice is probably going to cost as much as bourbon here soon. All right, so you're asking me what this picture was. Well, I'll tell you what. This picture is Jerome Powell, which I wanted to make him a donkey of the day, but oops, that's not Brandon Wendell. There we go. That's what I need to do. I wanted to make him kind of the donkey of the day because, as you guys know, I have these wonderful graphics that Tim created for me a long time ago dealing with the donkey of the day, but I couldn't find a way to... The AI I used wouldn't put Jerome Powell's face on a donkey like I wanted to. It kind of morphed and made him look kind of funny. Why would I start off with this talking about Jerome Powell as the donkey of the day? Well, if you guys read my bar chart article, and I obviously am going to self-promote myself and encourage you to watch or read the bar chart article just because I think it actually helps out. Others of you most of you know my thoughts on this one because I've been talking about it on this. Oh, wow. Now, yeah. That's kind of funny. It apparently my current article is not available. That is really interesting. All right. Well, I guess I won't post that one again. I'll have to find another way for you guys to see this article. Anyway, my article was about the bond markets and kind of the tricky situation that we see going on in that bond bubble and why there might be some problems there and what caused all of this. And of course, I called it the donkey of the day because Jerome Powell is the clown. Yeah, he's a clown in this case. Here's the article link if you guys want to read it. Check that one out and share it with your friends if you like. The comments he made today, some of you may have seen that. He was, or actually yesterday, Jerome Powell was talking about how, the actions of the Fed may have had something to do with the rising yields. Like, you can't expect people to fall for that bullshit. There's no way you could get us to believe that you're raising the yield curve or increasing the short end of that yield curve from 0 to 5.5%, 5.25%. has had no impact in the long term. Of course it has. And the shocking part is the Federal Reserve is the central bank. The Federal Reserve is in contact with all the banks that are members. They have to be, right? So you have to know that your plan going forward is to aggressively raise rates. And that is in turn going to hurt the typical banking business model. So if you want to look at somebody who's kind of responsible for the failure of these banks, and I do agree that you're going to see some more bank failures here shortly, it's the Fed. I mean, at a minimum, the Fed should have gone out to some of these banks and said, hey, listen, guys, just so you know, over the next year, we're probably going to be raising rates aggressively. So, be careful. You got to help your buddies out there. There's no way they would have blindsided them like that. So I call fishy, I call BS, I call something weird going on behind the scenes, and I have him as a clown here because of his statement that he made, which is just kind of stupid, and the only people that would fall for that talk track are people who have no idea how these bond markets work or the relationships between bonds and interest rates. As it goes forward, he said maybe we could pause right here because certainly there's a concern that if you keep raising, it's going to raise those 10 years and further long-term dated bonds. However, the other shoe to drop here is, as I pointed out in the article, you have, lots of gullible. That's true, Lisa. That's true. And knowledge is power. It's a weapon to some that use it incorrectly. But if you look at the current market, I can't help but to look at Israel and the Ukraine and look at how much money we're spending here. The spending package that's proposed by Biden's administration is pretty significant. Of course, that's more money in circulation. That's going to put us further stress on our debt. We're at what, 33 trillion. We're at 33.6 trillion now. We'll probably be at 34 trillion by the end of the year, most likely sooner. That means they have to sell more bonds. The more bonds they sell, the higher yield they're going to have to pay because unless you find more buyers for these bonds, you're not going to be able to sell them at the same rate. So, I think it's going to get higher and higher and higher. Let's take a look real quick at that 10-year bond just so we can kind of see what that looks like. Now, you did have a little bit of a drop today. It was down 1.48%, but still coming off the heels of a tremendous week. I mean, if you want to look at just straight yield run up over the past week. It's 5.8% increase in the yield. Now that's from open to close, where we open on Monday and close today's trading session. That is a pretty significant pop in bond yield. So yeah, I can't help it, but I have to put Jerome Powell as the donkey of the day. I mean, granted, your actions did what they were intended to do. The Federal Reserve underneath Ben Bernanke and Janet Yellen, and now yourself, Mr. Powell, have done well at stimulating the economy. But as I write in my article, one of the things that I think caused all this, I'm okay with quantitative easing to some extent. I'm okay with parts 1 and part 2. However, the thing that I don't like is that if you look at this price chart here, let's go to the S&P 500, we'll do the cash index. If you look at this on a weekly time frame, right, and it goes back to the financial crisis, and there's the financial crisis on the far left side of your screen. This is, up to that point, one of the worst sell-offs in the history of financial markets. You can go from the peak right here to that bottom, and you're looking at 57% slide in the S&P 500. Pretty insane, right? Well, once we recovered, and I would argue that once we got to this point here, where this blue line, once you got to that point, you started breaking highs, you should have stopped buying bonds. You should have stopped buying mortgage-backed securities, and you should have started to remove money supply. This goes back to the analogy I make about, a drug addict just needing more and more and more. Once they got to this point, it was like, keep going. The system hasn't broken yet, but anybody who studies basic economics knows that it's going to come pulling back at some point. So they should have stopped this back in 2013 to 14, in my opinion. I don't think it should have gone any longer than that. And we continued on all the way through with a minor pause in 2015 right here. And we continued all the way through, and now we're still doing it today. More spending. I write in that article, there's really 3 solutions to this. Number 1 is, I can't remember off the top of my head. Yeah, unless you're the bond part of thing, Lisa, is that what you're talking about? Yeah. I don't know, lots of other people. The bond part of it is what really scares me. If you look at how bad the bond market is just crushing people who have been buying bond portfolios. So if you bought TLT, I make the point in the article and I draw a picture of it. It's bigger than the dot-com bubble. Bigger than the dot-com bubble. Pretty crazy. At work betting baseball, huh? Cheers to baseball. Dodgers are out, so I don't really have a dog in this fight at all. As long as the Dodgers are out, I'm a happy man. Giants never even had a chance, so we'll leave it there. So my point's on, how we can get out of the situation. There's only 3 options that would fix this market. Number 1, the Fed begins to lower interest rates on the short end of the yield curve, ASAP, like next meeting. Not going to happen. Inflation is not under control yet. We saw some recent surges in that. We saw some of the economic data spike back up. We saw a lot of the manufacturing data post-negative, not really looking good on that front. So the Fed's not going to lower the short end of the yield curve anytime soon. It was actually forecasted to happen in the middle of next year. Demand increases for long-term bonds. This one could happen. I put it's unlikely to happen simply because our growing debt puts us in a more precarious position. The more debt we take on, the more likely we're going to end up in a default type situation. Now, it seems inconceivable. Let's see, U.S. debt clock. It seems inconceivable that the U.S. would default on their debt, but at a certain point, when you're in that much debt, you got to declare bankruptcy. And who knows if and when that would happen. Let's hope it doesn't. That would be absolutely terrible for our country, but it could be pretty ugly going forward. So that's that second piece is demand increases for long-term bonds. I doubt it, but let's be honest. As these long-term bonds surge, some of you, let's explain why this would be a good thing. And I'm nowhere near retirement. But let's say I'm 60. I plan on retiring probably 55. 55 is my number. I think I'm going to stick to that. At least a job that I'm not really that into. I'll find something that really makes me happy, and I will do that for the rest of my life. Trading will always be there. But let's say I'm 55, and I know that I need a specific amount of money to come in every month for the rest of my life. I don't trust Social Security. I believe that Social Security will not be there. Personally, I don't count on Social Security. So why wouldn't it be? It would be a good idea for me to do all the analysis that I need to do and say, this is exactly how much I'm going to need to cover my living expenses, my food, my recreation, all the fun things I want to do, plus medical expenses. And if that number, let's say $5,000 a month, because my home will be paid off a long time ago, if that number is $5,000 a month, I might look at the bond market and say, hey, if I can lock in at 5 years for the next decade, I've got 10 years of quasi guaranteed income streams coming into me. That might be something that starts to increase demand for those longer term bonds. And I do think I would not encourage you to do that yet. I think you have to wait because I do think we're going to see higher bond yields. But at some point, those bond yields will become fairly attractive. And again, I'm not a long-term bond guy, but if I see the 10-year get up to, let's say, 10 or 11%, I may be putting a lot of money into long-term bonds because over the course of time, what will most likely happen is the equity markets are going to crash from there even worse. And I know I have consistent income streams going that way. So that might be one of the things that allows the bond market to gain more demand is people realizing, hey, I can lock in a quasi-guaranteed. I say that loosely because obviously nothing's guaranteed. The government defaults, you're still getting hosed on those bonds. So, yeah, that's option number 2. So we had first one, the Fed begins to lower rates on the short end of the yield curve. Not going to happen. Second one was demand for long-term bond increases, therefore pushing yields down. That could happen. And then the third one, which I have to thank Bill Addis for this one because I asked him about it. He says that Congress significantly shrinks the budget and reduces debt. And I wrote, well, let's be serious. That's not going to happen. The government is addicted to spending. Now, we have some members of Congress who are waving the flag saying, yes, we need to make cuts, and bravo. But at this point, it's all talk. You can have one or two or even a dozen politicians say, we got to make drastic cuts, and we have to fix this, Bottom line is you're going to have to convince the majority of it to happen, and it's just not going to happen. Both sides hate each other, and if one proposes one thing, the other side hates it. So that's not going to happen. So right now, I think you're talking going up and up and up and up and up. Times the debt clock doesn't matter because Janet Yellen has plenty of money. You want me to do that one for you, Tom? This is for you. Here's your second donkey of the day. We'll make it Janet Yellen for her comment that says, we can fund multiple wars. We have plenty of money. It's like, oh, you realize that most Americans don't want to be funding wars, right? I'm pretty sure if you did a survey of all Americans and said, should we be funding wars for, you pick the country, should we be doing that? Would you rather spend it on these things? I'm pretty sure most people would say, let's stop the conflict. But hey, whatever. It is what it is. Yeah, so Janet Yellen, when she made that comment, I was kind of held my head in my hands because you have the Fed has been making all these attempts to help reduce inflation. But if we end up sending so much money to these other countries, you're actually going to be increasing inflation yet again. So, damned if you do, damned if you don't. So we got a double donkey of the day on Friday. Cheers. Cheers to a double donkey. I agree, Lori, which is why I'm such a fan of Bitcoin. Because Bitcoin, you can't print it. They can print money infinitely to fund wars. But if you don't have the printing ability, there will be no wars. I think it was Saifedean, I forget his last name, Saifedean Ammous, and several other prominent cryptocurrency guys talk about this. And if you don't have the ability to just make money out of thin air, you're not going to spend all the money on these wars. Imagine if we had accountability in the United States and we had no ability to print new money. We have what we have and that's it. When it came time to, hey, do you want to send all this money to this country and that country for support? It's like, I don't really have it to spare. But now it's like, oh yeah, you need some? Sure, let me just print that up real quick. You guys got it? Okay, good, we'll just send that over here. Yeah, we'll send it over here. Crazy the way that works. So yeah, if you have Bitcoin as your currency and no ability to print, which is why you'll never have Bitcoin as the world reserve currency. Fiat currencies need their power. The US, the Euro, the England, the UK, they're not going to just drop their currencies because it gives them power, the ability to manipulate markets, to fund all these operations that in many cases are underfunded. So, all right, we had a whole bunch going on here. Captain Price says no safe havens and bonds. Correct. You could argue that treasuries, short-term treasuries, are safer. I doubt the U.S. government's going to default in the next, call it 8 to 12 weeks. You go out 10 years, and yeah, there's a possibility. I mean, you had the Fitch downgrade happen this year. That was kind of a shot across the bow. I'm surprised we didn't see some others, S&P or Moody's, also come and downgrade that U.S. debt because let's be honest, when you take on that much debt, your ability to pay the interest on that debt becomes much more stressed. And here you got it. When I wrote that article, I wrote that Wednesday night at about 11 p.m. All right, so I released that article yesterday. We were at $33,548 billion. Well, we've already increased $100 billion in our national debt according to the U.S. debt clock. Crazy. You know who's not incurring more debt? You know whose balance sheet is getting better every month? Mine. Why? Because I'm working on it. I'm working on a balanced budget. I'm focusing on my expenses. Yeah, I spend money here and there, and sometimes I buy things I shouldn't buy, like the giant, what did I just buy? I bought a giant costume from, oh my God, what's his name? The Grinch. The Grinch Stole Christmas. A giant costume, but I returned that one today. I didn't need it. I wanted it, but I returned it. So yes, I agree with you. There is no real super safe haven, but on the spectrum of safety, I would say short-term treasuries, T-bills are probably the safest way to go right now. Imagine I could do that with credit card debt. You could buy, you could buy as much as you want. Just spend, 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 spend. Blue Diesel says, when it doesn't cost them, they don't feel it. That's why they can go to war, because they don't send their sons to fight. True. And regardless of what happens to the economy, they're getting paid huge money, right? You don't see all of a sudden, when we go into a recession, wouldn't it be great if we went into a recession, it got to the point like, oh, we're going to have to lay off some senators. You guys can lose your jobs because of it. You essentially have done such a poor job that we're all suffering because of it, but you get to keep your job. That is something that I think fundamentally should change. Maybe they get compensation on their salary based on, or their compensation as a senator or elected official is based off performance. And that might change a lot, right? I have been an advocate, or not an advocate, but a sounding board for my disdain for politicians who are voting on very important matters for you and I, but because they might benefit to sway that vote one way or the other, they're not operating in our best interest, I don't believe. Congressmen and women, correct. I remember when you used to dress for Halloween, it was a big deal. Pepe, I still dress for Halloween, which is why I generally don't work on Halloween anymore. I don't work on, there's one day guaranteed I don't work. That's my birthday. Halloween, typically, I will not be working either. We'll see if I do a show on Halloween. I got a lot of stuff going on here over the coming months. So let's see. We're having to dodge currency, not Doge. We're definitely not Doge. Accountability in the U.S., that's just crazy talk. I agree. No one wants to have accountability. It's nuts. MJ says we need to get rid of them all and start over. Honestly, I don't know if we need to get rid of them all. I actually think that there's some decent politicians who are trying to do good, but they are far outweighed by the old school ones that have been in there forever and want it their way and aren't used to change. If you look at some of these senators that are on office right now, congressmen, congresswomen, some of them have been in office since way before the computer. Let that sink in. Before the computer was really a thing. So their understanding of technology might not be up to speed. And as we innovate, we need people in office who are more forward thinking. What's the future of an economy look like? What does the future of money look like? What does the future of business look like? What does the future of global interaction look like? And maybe we have some people that put policies in place to help foster and bolster those segments of our economy. Sadly, I think we have too much infighting to ever let that happen. And what I don't understand is how every single one of us here, it's not just this, but if I went to a broader audience, we're all pissed off, but nothing's changing. What has to happen? Do we have to march on the Capitol? Well, look what happened to that one on January 6th. Now, that was for different reasons. We can do it in a peaceful way, but at a certain point, change has to happen. I hope it happens in my lifetime, but, seeing how the track record of history has not really made much of a change, I don't expect it to change anytime soon. How is OTA benefiting from using Tradier? Well, it's a great application for the students to use. I mean, it's something that they can use in classroom. It's something that they can use on their own. It just ties into the content. So it's a good options platform. Plus, one of the big benefits there is you have, depending on what account you set up, I think for OTA graduates, it's $10 a month. And if you are like myself that does a lot of options transactions, $10 a month might actually be a good thing. I will probably be switching over to Tradier here real soon because of just the sheer volume of options that I do. I mean, that I bought 50 call options on Tesla yesterday. Those are intraday. That's 32 in, 32 out. That's $64 right there. I could lock myself down to $10 a month by using Tradier. I'll probably start to do that. So it's just offering more tools and resources for the OTA community. Oh, there's some politician been there since I was in elementary school. Probably even longer. Let's see, Merlin, what is holding the U.S. from using USDC? I mean, it already is built. It works. The reason that so for those who may not know, and let me actually go to another question here, which is tied right to that. I think it's from Pepe. So there's two things we'll answer that. Thanks for asking that question, Blue Diesel. Yeah, Sly Dog, that's dirt cheap. $10 if you don't trade options very much, it's not that big of a deal. I become much more active. Like I will swing 50, 100 contracts at a time on some things. I'm going to save a ton of money by using Tradier. So they have multiple platforms, Pepe, multiple platforms. Click had issues, funding issues, just to get it across the finish line. Not that it's done, but it's just all of a sudden there was funding issues because of all the events that have happened. Money kind of dried up, so the production of that is stalled for now. I think that they're actually going to start to rekindle that with some partners, but I don't know all the details. So this question came in from Pepe, which is, what is USDT? So let's talk about what is USDT and what is USDC. USDT is Tether. So Tether is a stable coin, so is USDC. These are both stable coins. Now, in theory, the way a stable coin should work is when someone buys one token of either USDT or USDC, that dollar is now put into a bank account and stored. Right? That's the safest way that they should do it. That way you have your money is always safe, it's always insured. However, because we have a lack of rules and oversight right now by our regulators in the cryptocurrency space, it's up to the stablecoin companies themselves to self-regulate at this point. So when you look at Tether, which is a Chinese stablecoin, they have all kinds of corporate bonds. They're not very transparent on their holdings. They have all sorts of investments in there, a little bit of cash. Now, I don't have the breakdown, but when I was looking at this back in 2018, it was like 3% cash. 97% was in bonds, and they wouldn't disclose what kind of bonds. So when you had Evergrande and some of these other big real estate companies in China in jeopardy, the big concern was the Tether had bonds in these companies and they could implode, and all of a sudden that stablecoin is not very stable. So that's one way that they've done it. Now Circle, which is the one that backs USDC, is USDC, when you buy $1 worth of USDC tokens, they're putting some of the money into a bank account when it's audited, and then the other is buying US government bonds. Now, this is a great thing for the U.S. If I'm the U.S., I agree with you. I think we should look at this and say, hey, wait a minute, why don't we use USDC? It's a great question, Blue Diesel, because one of the reasons that people are concerned about stablecoins is it's taking money out of dollars. But if I'm buying a stablecoin and that stablecoin is actually buying dollars for me and government bonds, which they need buyers for, then this is a win-win for government, right? They should be going, let's use USDC. They should be. However, the government wants control. The government will want control of that system. And right now, if you go to USDC and say, hey, you can be the digital dollar for America, you've now given that power to them. Now, granted, USDC is backed by BlackRock and Coinbase and Circle, and I think even Goldman Sachs has a say in there, but it's not government controlled. So they're not going to let that out of their power control. What they'll do is they'll probably create their own CBDC, central bank digital currency, and that's what will happen moving forward. So Patrick, wasn't from Pepe asked the question, it was Patrick asked what USDT was. It's a stable coin, but the thing with stable coins, whether you're looking at DAI, whether you're looking at TrueUSD, Paxos, they're all constructed slightly differently. What I think will happen is the regulatory framework in the next year or two will be very clear as to when you buy a stable coin, that company can only do these things with it. Buy US dollars or buy US bonds. If they buy anything else, corporate debt, international bonds, whatever, they're not going to be allowed in the United States. And I think that is what should happen. And ultimately, that will probably push people to things like Paxos Gold, or Paxos, TrueUSD, and USDC. All of these have audited inventory, so you can go and see exactly what they have. If I was creating the stablecoin, I'd let you log straight into the bank account so you could see. You can't buy or sell anything, but you could see instantly real time that all the money is sitting there and give you a level of transparency that would be unparalleled in the financial markets. But remember, they don't want you to know exactly where all the bodies are buried. All right, you're going to get an ad right now. The little timer told me you're going to get an ad, so it's probably going to skip. Let's see. USDT seems heavily manipulated by Binance and the Chinese. Exactly, Blue Diesel, which is why I've been saying in my cryptocurrency classes since 2017, stay away from USDT. I don't trust it. It has the ability to implode. The lack of transparency, the lack of audits, the investments that they've disclosed that they're in does not make it a stable coin. However, it's much safer than jumping into something like USDD. Right, that's an algorithmic stablecoin from Tron, which is the exact same thing that was what Terra Luna was using. It's an algorithmic stablecoin that imploded. Are we doing the Fridays back-to-back show today? What? Well, I'm not doing back-to-back shows. No. We got a one show today. It's going to be a mild one either. We're already a half hour in. I remember, usually it goes to the glass of whiskey is done. All right. So that's hopefully answer that question for Patrick and Blue Diesel. Why doesn't the government use these stablecoins yet? Because they don't control it. You will see in the next couple years central banks using their own CBDCs, and then that will, in theory, push out maybe some of these stablecoins that are there. Oh, the Don Front. You know what? I haven't talked to Don. I don't think we're doing one. If you find out if he wants to do one, I'm always open to it. Although it's really hot up here today. I forgot the back-to-back shows. Maybe I'll text him while we're doing this and see if he wants to do one. Let's go to this one. So I'm going to do a couple things. I'm actually going to text Don and see if we're going to do a second show today real quick, just so because I have not had a chance to talk to him. Don, and then I'll let you know here. Are we doing a show? There you go. I wasn't sure. So let's go to this one from Gene. He said, how do your trades turn out today? Actually, pretty good for most of them. The only one that stung me today was Tesla. Closed out my Tesla and took a loss on that one. It just didn't, I thought about holding it, but then I moved on from that. Let's say TSLA. Here you go. Here is your chart of it. We talked about the symmetrical triangle. When it breaks, it usually does so very aggressively, and boy, howdy, crazy. Of course, that's what earnings announcement do to you. Don wants you to join his mentorship group. Thanks. I like that. So, the last couple of days for Tesla have been ugly. I actually thought we were going to bounce right around this 215 level. That's kind of why I sold those puts at that price. I picked up $1.25 worth of premium, but I had to cover it today at 250. So, ended up losing about 200. I made notes over here just so I could keep track of it all. I'm not sure what happened. It started at 228, so I'm going to go see what happened on my internet. This is the third time this week that has happened, so my bad. Hopefully you guys didn't drop from the feed. That is not a good thing to have happen. Not sure why that happened. Anyway, I'll continue on here. Thank you for the messages. Yeah, I knew right away when I dropped. I'm starting to get used to this thing and can see what's been happening. See if I get my stream back up here on your end, so I can reconnect to the chat so I can see all of you again. All right, so let me finish up with my discussion about there we go. Search new internet provider. I tell you what, Lisa, my internet provider has been solid. I have had zero problems with it. The issue has been this show right around 2:30 Pacific time. And it's happened, I think, 3 times. I don't think it's the ads. It's my connection says I lost stream. And it just pops right back in. So I don't know. It seems to always happen right around this time. So I apologize for that one. No reason why. I will do my best to try to figure that one out. So thank you guys that had patience to stick with us. We lost about 20 people on that one. So sorry guys, I'm not going to end the show right there. No way. I got more to talk about. To finish on with my trade setups and kind of what happened, all those. Need to update my router or whatever. Yeah, maybe that might be. But why is it only for this, and it's only that short period of time? Maybe it's neighbor stealing bandwidth. I did a speed test. My speed test is good. All right, so at XLU, I had TGT. You guys know I had some Target out there. Still expired worthless. That was at 105, so happy with that one. Again, these are some pretty good premiums I received on these because of the pain point just a couple weeks ago. ExxonMobil. I decided to keep ExxonMobil. I was debating getting out of it today because it just had such a great run from where I got in. It's been, this is a very nice winner for me. But I am of the opinion that going into this weekend, if I was long, I'd be nervous. Going into the weekend, if I'm long, I would absolutely be nervous because of the conflict and just stuff going on around the world. Going into the weekend short, I feel much more comfortable with that. So I still am short. I've got IWM. I'll bring up the Russell. Actually, let's start from the bottom, and I'll tell you about the positions I have. Here's your NASDAQ 100. Boy, I have people messaging me saying, I want to buy the NASDAQ 100 right now. Well, okay. I get that. I understand why you're looking to buy the NASDAQ 100. You're right near the bottom of this descending triangle, right? If you look at today's closing price on the triple Qs, or NASDAQ 100 futures, 14,664 is where we're at right now. Well, that line, which is kind of the line in the sand, is, 60 points lower? That's not much. I mean, 60 points is very, very little from here. So if you're trying to catch that falling knife, this is certainly the spot to do it. But you better put a stop loss on this one, because if any bad news happens over the weekend, we're going to gap down past 1450 and see some much bigger downside movement here. The pressure, as you can tell by this picture, it's getting weaker and weaker and weaker. I think you're seeing lower highs. NASDAQ, once this thing breaks, could really have problems. And keep in mind, you guys all know what's happening next week. All know what's happening next week, right? Microsoft and Google on Tuesday. You have Meta on Wednesday, and you have Amazon on Thursday. Now, those may save this, and all of a sudden, NASDAQ comes screaming back up. But if they miss, if their forecast is bad, boy, I tell you what, you might see some really big downside moves. So be careful. I would not, even though this looks great, if I didn't have those big 4 companies reporting earnings next week, maybe I'd feel a little, if I had no international tension, I might feel comfortable buying here and carrying into the weekend, but I do not. NASDAQ on the day down 1.52%. For the week, oh man, it has been an ugly week. Now, it's not showing you the full damage because this is from open to close down 3% for the week, but peak to trough, you're looking at a 4.5% swing in the NASDAQ this week. That's pretty substantial. Moving on to our 10-year, right? We've had obviously a monster move up. We already talked about this one. This is pretty significant as well. Again, this is part of the reason we saw these markets dive is just bond yields surging. We broke 5%. Now, we are currently at 4.91, but I do think we're going to see this move up higher and higher and higher over the coming months. Here's the one that I am still in, the Russell 2000. Yes, it has been a great week. I think some of you are actually in this trade as well, so congrats. It has been a phenomenal trade. You know, people say supply and demand doesn't work, and I'll say this 100% honesty. You're right, it doesn't always work. But you still have to take your shots at it, and sometimes you find a supply zone that works, and you go, yeah, great. Other times you don't, or you take it and it gets stopped out. So what? Move on. Yes, this was perfect. From the way I trade, I looked at this level right here, and that came up on Tuesday. We popped right up into it, shorted on Tuesday, and it's been literally just in a free fall ever since. We're closing near the dead low every day. The only piece, I almost thought about closing out my Russell trade here because my target was 1650, right? And that's right down here near the bottom. But I still think we're going to see more oversold. As Pepe says, yeah, that's not just Bob Dunn. That's every trader who knows their stuff. Oversold can get more oversold. And, you know, when you look at a chart like this, let me switch this to a weekly just so you can see the picture. When you look at a chart like this, and Tom's with us today, and Tom, I think you would agree. Let me know what you think on this one, Tom. But when you look at a chart like this, your mind is saying, all right, it's stuck in this range. It's been bouncing back and forth. Great. It should stay in this range. But the second that this thing breaks out of this 1650 mark to the downside, you got to be going, oh, crap. Now, all of a sudden, it's going to do price discovery and find a new demand zone, which could be significantly lower. Now, I've got the 15,445 mark, but there might, you know, it could be where that break triggers massive amounts of automated sell orders and stop losses, and you could see a big surge down on those days. And notice that the Russell is right there at the bottom. We're very close. NASDAQ is at it right now. I mean, that's a great descending triangle on the weekly. Here's your S&P. Right, S&P is breaking lower and lower. It's already broken through these lows. Here's your daily. Right, you notice that today we came right down to that low that goes back to the low that we established on what is the date? October 4th. You know, 42.35 is that low level, and we're at 42.48 right now. If you break that one, I think you have better steps down on the S&P. All right, and it's more diversified, so I think you're safer with S&P anyway. But the trend is lower highs, lower lows. I think you're going to see this thing break to the downside. So again, I'm not taking home any long positions going into the weekend other than silver, right? I have silver still holding that long, and we'll look at silver here in just a second. Yellow boxes hang around and suddenly disappear, right? Hey, and you play those boxes until they disappear. I could get rid of this yellow box because that was a demand zone that it actually respected it for a day and then came right back down. All in all, things looking good. So those are our major indexes. S&P down 1.27%. Here's crude oil down 0.33%. Still, it's trending up over the past 2 weeks. We'll see if it challenges that 93.68 high that it did back in late September. Dollar index, slight down day. Really, this week has been kind of boring. It's interesting to see that this sideways action here because we've had such volatile days in the market, really panicking and I think fear of the unknown in the future. Right now, the dollar is not hurting or helping. It's really just gone sideways all week. So nothing being contributed to the market, either bullish or bearish from the dollar. However, the trend is still up, so keep that in mind as we roll into next week. That dollar may end up surging to the upside here. Gold on the day, 0.7% gain. Oh, and where did gold rally right up into? Right to this overhead supply. You are dead smack into it as it broke that 2,000, now starting to sell off. Keep your eye out for gold next week. You know, if we get below the lows of today's candle, which is 1983, you may see some corrective phase there, maybe bring us down to about that 1935 mark on GLD. So, or not GLD, on the GC futures. So yeah, this great move up for the past week. I mean, look how much gold has moved up. Obviously, this has made for a phenomenal couple of weeks for me. I do have some gold. Overall, 10% swing in the last 10 trading sessions from bottom to top. Silver doing well as well. So if you go from the dead low there, which was on October 4th, to our peak, silver's up 14.5% peak to peak. From bottom to where we are now, 12.8%. And granted, you know, given the size of my position, it's been a great week. Again, I told you I had $22 call options on that. I'm going to probably sell the $23 call options for November on Monday morning on most of my portfolio. So love it. I'm challenged here because many of you that are traditional kind of fundamental people are going to look at it and say, well, the dollar keeps going up, then commodities should drop. Yes, but I think what you're going to get is a move, even though the dollar continues up, I think what you're going to get is money coming out of equity markets because of the risk associated with economic slowdown, and they're going to go into safe haven assets like the US dollar, like the Japanese yen, like the Swiss franc, like gold, like silver, and precious metals. So that's kind of how I position myself over the past couple months, and it's starting to pay dividends, which is good. I like having that that general idea. And again, you know, going back to our beginning of the year, let's go to the January 2023 just to see the picture here. We made forecasts on the S&P, and I said Q1 up, Q2 sideways, Q3 and Q4 down. Well, I was dead wrong on Q2. Q2 was incredibly bullish, but I was right on Q1, wrong on Q2. I'm right on Q3, and we'll see if this does continue. If we start making new lows, then you know that might end up bringing us sub 4,000 on the S&P. I know that's a long ways away from current levels, but you know the trend is your friend to the bend at the end, and with all the uncertainty, it is definitely a very real possibility. Just make sure you have your stop losses in place. All right, I got a whole bunch of conversations coming through. How much time I got? All right. I've been playing with trades that look more like yellow duckies lately. All right. What do you think of Target? I guess it depends on your time frame. So I was selling puts on Target. My strike price is 105 because that's an area I would be okay buying it at. As you look at this, clearly in a nice big downtrend. Of course, a lot of people having their opinions about what they did with the questionable marketing and questionable sales and positioning, but Target was up over 260, and here you are at 108 bucks. So if you're looking long term, I actually think selling puts on Target is not a bad idea. The premium's pretty high, so you can get some good premium by selling puts on Target. Find a price that you're comfortable at. Maybe it's that 105 mark. Maybe it's the 100, which is just below the low we had on October 6th. Fine. I think I'm okay with Target long term. I think that people, if they do start to have financial hardships, will move to Walmart and Target to buy their goods as opposed to some of the higher end consumer discretionary stores. Let's see, what else do we have come through here? Is that 3 down pattern of red candles down called a marching soldiers? No, it's actually called, so let me get that one up here. It's good question. So this is actually called 3 black crows. So if it's white candles, so these are down candles are red or black, and in Japanese candlesticks, this 3 big red candles would be 3 black candles, and that's called the 3 black crows. And then you have the 3 white soldiers. So if it's moving up like that, it would be the 3 white soldiers. Those are the difference in those patterns there. I was thinking of buying a put on GLD today, but my rule says no debit trades on a Friday. Cool. There you go. I like you follow your rules. Don't worry about it. No Don update. He didn't message me back, so probably no show there. When you buy puts, do you look for certain delta, say 25? No, I don't. I don't look at delta. I know a lot of you guys are gonna freak out here, but I don't look at delta typically. I just look at what the premium is going to give me. If I'm looking for 1%, so the strike price has to be comfortable with me. So let's say, for example, let's go back to Target. I know, let's go to XLU because I'm probably going to sell more on XLU next week. I hope that we get a reckless sell-off here in XLU again, and I'll look at selling those 54s. and I'll sell those for November because I'm happy owning utilities at $54. We're going to keep using utilities. I'm not concerned about that. I'll even be happy owning it and taking a dividend payment of 3.5%. So if I was selling puts here, I am typically going to make sure that the reward is worth it. Like, am I going to get that 1% per month? That's typically my minimum for selling puts. Oh, you're talking about buying. No, I don't. No, I don't look at Delta or anything like that, John, when I'm buying puts. Really, what I look at is how strong is my conviction about this specific trade? Do I really think that this trade is going to move? Because if I felt like, when we look at the IWM trade that I made this week, if I looked at that one, I tell myself, all right, I feel pretty confident this overhead supply level is going to hold. So I could have gone in there and gone into IWM, and I could have sold short. And that would have cost me a ton of money, right? It would cost me, $176 per share. I'm just using the leverage of the options on that. I'm not using the delta. So, yeah. Ideally, I want to sell as markets are rallying, buy these puts as markets are rallying into supply. So the IWM trade from Tuesday is kind of the perfect storm. It was ripping up into overhead supply. Premiums were really cheap to buy puts. I bought out of the money puts and been riding those ever since. And again, I bought for January 17th. Do I use MACD as my indicator? Nope. No pinpoint. I don't use indicators. Indicators are like the console dashboard on your car. The only thing I look at on the dashboard of my car is how much gas I have. I don't really need to know the speed because I can tell kind of how fast I'm going. I've been driving most of my life, so I can tell how fast the car is going. And I certainly don't look at the tachometer because I drive an automatic truck. If I was driving manual, I would use my ear. So a lot of that functionality on that dashboard is just decision support in your vehicle. When I look at RSI, MACD, stochastics, I think all that is after the fact. They're all lagging indicators. John says indicators are idiot lights. Well, they're a crutch. They can certainly assist you, but remember, anytime if you're talking about MACD, you're talking real late. That's using a 12 and a 26 period moving average crossover system. That's what a MACD is, right? It's when the 12 period crosses above the 26. Yeah, you can get divergences, but just look at price, right? I do not need to bring up a MACD right now to tell you what IWM is saying, right? The 12 is way below the 26. This thing is ripping. It's in an oversold situation. That does not mean I need to buy. So no, pinpoint, I do not use indicators. One thing I always encourage my students to do is if you want to learn indicators, and I do think you should learn indicators because you want to know what other people are thinking. For example, do I have any on my screen here? I've got moving averages and I have ATR. Well, if I put a moving average on this, I don't need, it doesn't matter what time frame I put on here. If I put a 5, a 10, a 20, a 50, an 80, oh, wow. Margaret, don't insult me on a Friday afternoon. You're going to make me finish my whiskey early, Margaret. I sound like Sam. Oh, God. What a that's like the worst thing that you could say to me, Margaret. Man, what an insult. You could call me all kinds of curse words. You could throw F-bombs at me, but to drop a 3-letter word and call me Sam, Margaret, I'm blocking her. That's it. You're done, Margaret. Get out of here. Anyway, to pinpoint his question, I don't need to put the moving average on you. I don't care what moving average I throw on this right now. It's downtrending, and it's strong. It's accelerating away from it. I mean, this is your 200, right? It looks like a 200. Let me just make sure. This is a 50, all right? So it's a 51. I know, Margaret. I know. This is a 50-period moving average, but what I would encourage everyone to do is, tell yourself, what do you think the indicator is doing? Like, I love Bollinger Bands and MACD and stochastics and all that stuff, but I don't add them in. I already know what they look like. And I know it sounds cocky and arrogant to say I know what they look like, but I think the people that have been watching this show for a while, you've seen me look at hundreds of thousands of charts just in the last couple of years we've been doing this. And mind you, I've been doing this for 27 years. So I've looked at millions and millions of charts. And for that, I've developed an eye for them. What you don't want to do is start adding all these things on here. So for example, what people like to do is they'll add like this, and they'll go add one more. Let's go ahead and you like MACD. Let's add in Bollinger Bands just because it's on the top part of the chart. So we'll go add in Bollinger Bands, and then leave those on there. Oh, I can't add any more. Isn't that nice? All right, get me out of here. It won't let me add any more indicators because I don't pay for the paid version, which I might actually change. I will probably change and buy the paid version when I get this amazing discount ad they run on Black Friday. But here, I've added Bollinger Bands, I added moving averages, I got volume. What happens here, the problem is I'm starting to lose sight of what's important. I'm losing sight of the price chart itself. Now, do you really need to have the volume on here? I think it helps. You can tell that there's fear going on right now. I don't think we've climaxed on our fear here. So I like the fact I have volume, but it's covering price. So if I take volume out, picture looks a bit cleaner. But now I've still got these big bands wrapping around price. I don't really need the simple moving average. And then Bollinger Bands, I mean, you know what Bollinger Bands tell you. They tell you where is the close right now compared to the last 20 days. So this is the dead low. I know it's outside the lower Bollinger Band. There's no problem with this. So when I remove this, this is where it becomes more powerful. And, Don is the same way. He doesn't have all his indicators on there. It's just, I'm not trading an indicator. I'm trading price. So at this point, I actually don't even like having grid lines. You guys can see there's these grid lines on here. That's typically not for me. I will go in here and click on that. I will go into background. It should be under canvas. And I take these grid lines out. I don't want grid lines, none. Notice now my picture is very clean. I like this one. I like it when I'm not distracted by lines that don't mean anything. Those lines are arbitrary, put in by the computer to help identify whole numbers. So that doesn't make a difference to me. Markets don't always turn at whole numbers. They can, but they don't always turn at whole numbers. So anyway, good question there, Pimpoy. What is the science behind a trend line? You mean as far as how do you draw them, or what's the logic behind it? The logic of a trend line is simple. The trend is your friend till the bend at the end. So if you have a trend line drawn, you use that as a mechanical way for you to stay in a trade longer, and also maybe to establish your point for stop losses. So let's pick a different symbol here. Let's go to Apple. All right. I already got stuff drawn. Well, I'll just go with this one right now. So the science behind it is you have 1 point starts the line. You have a second point for confirmation, or to draw the line. And I'll draw it here. And then you actually have a third point for confirmation. So if you look at this right now on Apple, that is a very clear, logical down move going on Apple. We don't need the trend line to see that, but if you're short Apple, then that trend line may actually act as a stop loss for you if you're using a mechanical stop like that. So that's the logic behind trend lines. A trend line should only be across the tops in a downtrend and across the bottoms in an uptrend. I don't really think about channels, and there is something to be said for channels, but is there a fib correlation? Not with trend lines. Typically, fibs are just a mythical indicator based off the golden rule. I actually like Fibonacci, but it's definitely very subjective. Pepe Dan Sugar is a trendline subject matter expert. I don't know. I haven't talked to him in a long time. He went off the deep end politically on his social media posts, and I just don't have patience for that. When you start insulting politicians and everybody in the world that believes one thing, I think that's kind of shallow. So he comes from a legacy of floor traders on the butter and eggs trade and CME. Hey, moving averages are fine. Right, moving averages are great in helping you stay in a trade longer, but I think what happens is they distract you from what's important. Even with this, I feel like I have too many lines on here for Apple right now. Like I don't care about this top line anymore. Right now, the only one that really would matter to me is that trend line. Right, I would go back through here and find some demand zones that might be relevant going forward, but it's about simplicity. It's really about simplicity. Your thoughts on Tesla weekly chart showing an inverted head and shoulders. Go to Tesla. Go to your weekly. How much time do I got left? Oh my goodness, I gotta get here. I personally don't think that's an inverted head and shoulder. That's this is like a Picasso Guernica. I know what you're seeing. You're seeing this shoulder here. There's your head. There's your shoulder. It doesn't really have a neckline, so technically I would not call this a head and shoulders pattern. Depending where you want to draw your lines from. If you're going to say that to that to that, that's not a head and shoulders. You're going to incorporate that, and then you're here. Well, no. I don't personally think that's a head and shoulders. You're stretching it too much, right? And for me, the way I look at it, MJ, is if I have to struggle to see it, it's not going to work. Like the one we've been looking at here on this program a lot has been the Russell. And honestly, my trades have been built off this, not on the weekly, but on the daily. Right? This has been the trade that's really helped my year of trading. Let's get these out here. But you can see it here. That one's very clear. You've got your left shoulder, the head, the right shoulder, and then the neckline cleanly cuts through all these bottoming tails right here. And we use that, or I use that as an entry point. I've shorted multiple times through here. And using as a measuring object, my target is right around 1650, which we came awfully darn close to today. So yeah, unless they jump off the screen, I wouldn't go for it. Regression channel works well. Yeah, it does, especially when things in a pretty strong trend. Torture it until exactly. You love that phrase, huh? If you torture it long enough, a chart will tell you whatever you want to hear. All right, I got to wrap up. I got things I need to take care of. I don't think we're going to do a show with Don Prawn today. I just didn't see a message back from him. Make sure I actually hit the send button. No, he didn't respond back. So apologize. I should have done that earlier. I couldn't do it last week because I was teaching a class, and well, we won't do one today. Maybe we'll do one next Friday. What's next Friday? Oh no. Next Friday, I will be out as well. I'm lucky if I do a show for you guys. The 26th is my birthday, which will be no show next Thursday, and typically I may actually take Friday off as well because I have some big things I got to take care of. So I'll let you know on Monday how next week's going to play out. I'll probably do a Monday, Tuesday, Wednesday show, and then from there I might not do a Thursday, Friday. Sorry, I'm getting old. I need to do it gracefully. Anyway, thank you guys so much for the participation. I hope you enjoyed today's show. I hope you learned a little bit. Did I get to all the questions? Yeah, Gene's question on my trades. Do I have time? I do. Yeah, no, I'm going to wrap it up. Betty, I will get your question on the IWM on our Monday show. So thank you guys so much. If you have something you want me to discuss, guests you want on the program, let me know. Send it in at TraderMerlin@gmail.com or down below any of the YouTube videos, and I will get to all those. Thank you guys so much. Have a fantastic weekend. Cheers. I got a little whiskey left.